Hello folks, welcome to the Highway Investing channel. Today I will go over 4 growth stocks that are reasonably valued and have the potential to grow your money 5 to 7x in the next 5 to 10 years. The first stock on my list today is Splunk, ticker symbol SPLK. Splunk is a mid-cap software company. The company offers Splunk Cloud Platform using which people like researchers, engineers, data analysts etc. can generate meaningful insights from machine-generated data. For example, software engineers can generate charts, real-time alerts etc. from web server logs. Or see the amount of usage of a particular feature in their product and so on. This company went public in 2012 and has been steadily rising ever since. Today it has a market cap of roughly $33 billion. Now let me go over how the company is performing and how healthy is their balance sheet. The company has a price-to-sales ratio of 13.65, which may seem high if you think from a value investor perspective, but for a growth company like Splunk, the price-to-sales ratio of 13.65 is relatively very low compared to other growth stocks. The company made about $2.37 billion in revenue in the last 12 months and it has been steadily growing. The revenue is up only 2.2% year over year, which seemed terrible for a growth company. Let us see what really happened last quarter and why the revenue growth declined so much. Splunk starting from Jan of this year has been making a big push into cloud from their mostly on-prem platform. Along with this comes new accounting standards. Splunk switched from term contracts to cloud contracts with the customers. When a term contract is signed, most of the revenue is recognized immediately. For a cloud contract, revenue is recognized over time. This is what makes the revenue growth of Splunk seem terrible, but actually it is growing at a very rapid pace and we should see that in coming quarterly earnings this year. Let us look at their balance sheet. Splunk has $1.76 billion in cash and cash equivalents, and $2.16 billion as debt, which indicates to me that they are in good shape. Splunk is also mentioned as a leader in Gartner Magic Quadrant, in the area of security information and event management. Next growth company to buy is Okta, ticker symbol OKTA. Okta is an enterprise identity management company. Okta provides identity management platform for enterprises to manage their employees and customer identities, secure their access to applications and other resources through single sign-on. Okta is a major competitor to Microsoft's Azure Active Directory. Their biggest customers include Adobe, Major League Basketball, Tesla, LinkedIn, etc. Yes, you heard that right, LinkedIn, which has been part of Microsoft from past 3 years, uses Okta rather than Microsoft's Azure product. The company went public in 2017 and has seen tremendous growth in its market cap. Today it sits comfortably at around $27 billion. The company has a price-to-sales ratio of 41, which is quite high even for a growth stock, but if you are ready to hold the stock for 5 to 10 years you should slowly start adding this stock to your portfolio. The company made about $643 million in revenue in the last 12 months, and shows no signs of slowing down. The revenue is up about 46% year over year, which shows that they are expanding rapidly. Their balance sheet looks healthy as well with $1.45 billion in cash and cash equivalents, and about $1.16 billion in debt. Okta is mentioned as a leader in the enterprise identity management space consistently from the past 6 years. Next up, Workday, ticker symbol WDAY. The company offers Workday financial management application that provides functions of accounting, cash and asset management, revenue management as well as project and resource management. It also provides Workday Human Capital Management, HCM, application, which includes human resources management, compensation, absence, and employee benefits administration, etc. Although, there are some key players like SAP with its SuccessFactors product, Oracle HCM, Bamboo HR, etc., nothing comes close to what Workday offers as out-of-the-box solution. Workday went public in 2012, and has multiplied its market cap by 6 times since then, and is still growing. Today it has a market cap of about $42 billion. The company has a price-to-sales ratio of 10, which in my opinion is very low for a growing cloud services company. The company made about $3.82 billion in revenue in the last 12 months. The revenue is up almost 23% year over year. I have worked in about 5 large companies in the last 8 years, and 4 out of them use Workday to manage their HR operations. Workday and human resource management are almost synonyms in today's world. Their balance sheet looks healthy with $2.6 billion in cash and cash equivalents, and about $2.1 billion in debt. Gartner mentions Workday as a leader in its Magic Quadrant in the cloud HCM space. Last but not least, Slack, ticker symbol WORK. Slack provides software as a service, instant messaging platform that brings together people, applications, and data. It is used to collaborate between employees in an organization or between project partners in schools and in other places. It's available for both enterprises and regular consumers, like you and me, but mostly targeted towards enterprises. There are a lot of competitors to Slack in this space, most notably Microsoft. Microsoft's Teams product is in direct competition with Slack, and it is eating into Slack's business. I have personally used both Slack and Teams, and in my opinion both are solid products, but however, Slack has an edge when it comes to number of app integrations. Teams is a distant second, with only a little over 100 app integrations, whereas Slack has more than 10,000 integrations. Slack also has more paying customers than Microsoft's Teams product. I think the instant messaging space is so huge that there can be multiple successful players. Let us take a peek into how healthy and sustainable their business is. The company went public last year and hasn't had much success like other companies that I talked about in this video. It has been all over the place, bouncing between $20 and $40. They have an excellent management team and a robust product which is loved by all. Company's current valuation sits comfortably at $16.5 billion with a price-to-sales ratio of 23. Again, not super high for a growth stock. The company made about $697 million in revenue in the past 12 months and is growing at 49% year over year, which is super impressive given the amount of competition from Microsoft. Their balance sheet looks healthy, with $1.52 billion in cash and cash equivalents, and only about $840 million in debt. All of these are tremendous growth companies, and have great success stories behind them. They are market leaders in their respective domains, with great management. If management executes their plan really well in coming years, I don't see why they wouldn't be as big as Salesforce, meaning 5 to 10x their market cap in the next 5 to 10 years. All these companies' current customers are predominantly in North America and quite a few in Western Europe. They have huge business opportunities and growth potential in Asia Pacific and other parts of the world. With the Rona situation that we are currently in, pushing all the companies towards digitization, I have no doubt in they being profitable and super successful in the coming years. As always, have a nice day and stay safe. Please like, share and subscribe. I plan to make informative videos every day, and your support is very much needed.